When purchasing a property, there are a multitude of things to consider. Among them, collateral, equity, and even the capacity to pay. Today, our friends from Security Bank will help us better understand these considerations to help tailor-fit a loan product that meets your individual needs. And to help us better navigate home loan borrowing, we're here again with the Senior Assistant Vice President of Security Bank, Mr. Ernest Abanto. Again, Ernest, thanks so much for joining us here on the show. Now, let's help first-time home loan borrowers as they go to the bank. What you guys usually look for are developers of repute. How do you know that a developer is of good standing or not?
They have this reputation of finishing the projects on time. Delivery of the project is very important. No? And also, what type of equity participation are they requiring?
Equity participation means that when they purchase a lot, a home, or a condo, that they put some big amount of money to start.
Not so big actually, but it depends on the developer.
Do they usually have to pay it in one big lump sum, or can they spread out?
Not really, yeah. They could spread it for 12 months and the others are requiring 6 months.
Sometimes you require collateral. Is that on top of the equity?
Actually, it will be part of the equity because the property to be acquired will be your collateral.
What are the other fees that home loan borrowers forget or they don't see? Fees which are unexpected.
Actually, it's not a hidden fee. It is actually explained to the borrowers if they will apply for a loan. It's usually the registration expenses that will be incurred. Apply for a loan. So there's a registration for the mortgage of the bank. There's also move-in fees on the part of the developer.
Security Bank really helps people out tailor their loan. How do you guys help them out?
We have this loan calculator that actually computes for your monthly income, gross monthly income, versus the amortization that will be incurred by applying this loan. With Security Bank, we require 40% debt burden ratio or credit ratio. If you have a monthly income of 100,000, your amortization should not go beyond 40,000 pesos. And that's the strength of Security Bank because other lenders are requiring 30%.
How do you calculate what income he makes?
Like for example, if you're an employee, gross monthly income coming from your salary, if you have any allowances, we combine all of that together with your wife if you have a spouse. So that's your gross monthly income in total. It will be computed by 40,000 divided by your gross monthly income.
How about for people who are self-employed? How do we handle those type of people?
Well, we usually look into their financials like their income statements and specifically bank statements. No, we have to see the recurring income on a monthly basis.
You're talking about debt to income ratio, and it should be 40%. And this is primarily a first home where people will actually live in. There are some people who also want to buy for investment purposes, maybe a second home, or they're buying a condo unit.
Those kind of borrowers will require 30%, a credit ratio or debt equity ratio.
I see. Again, Ernest, thanks so much for your time. We really appreciate it. Now our viewers have a better appreciation of how to make a home loan for the first time. This personalized solution is just one of the many customer-centric service features of Security Bank. Join us again next time to know more about how better banking begins with Security Bank.